Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're going to be talking about special events revenue recognition. It's all people want to know is how much did we raise at our fundraising events? Well, the gross number is easy number to tell you, but knowing how much we actually brought into our organization is a bit more difficult. Special event revenue recognition can be tricky with the requirements from generally accepted accounting principles to the requirements for the 990 to what we want to see internally for ourselves, our management team, and our board. Now, we've talked a lot about what we need for the 990. So today I want to focus on the GAAP presentation and your internal financial statements. So let's talk about how to record revenue of various types from your special events, so we can see where we are successful at communicating where we did invest within our special event and in total, how much did we raise. So I want to talk about the different kinds of revenue that we can get from a special event. And the first one is contribution revenue. Now, obviously, we will take contributions during the event. That's contribution revenue. But if we have, say, a ticket price or, a dinner cost or something like that, we actually have to break that price between two types of revenue. One is contribution and one is event revenue. Now, our contribution revenue is the excess of the price that we receive over and above the fair market value of things that we're giving away. The best way to describe this is like a dinner. If we're charging $50 a plate to attend the event and we're providing a dinner with a fair market value of $20, then the contribution is the excess, which is $30. Now, we're recording those contributions as if we received a cash contribution of $30. We're recording it when we received it as an unconditional gift. Keep in mind, if the ticket price is more than $75, we have to, in our acknowledgement letter, provide the value of the goods and services provided, not our cost, but the value. So, if it's a dinner, not what the caterer is charging us, but the value of that dinner, maybe what the caterer would charge a for-profit or what you would get that in a restaurant, something like that. Now, the second piece of our ticket price is our event revenue, or the exchange portion, that we call in accounting with the new GAAP, where this is the value of the dinner that we're providing value for something you're receiving in return. So in our example above, that was $20 for the dinner. So that's what we're going to record as special event revenue. Now, this is considered conditional, that we have to have the event, we have to provide the dinner. So that revenue is recorded in the period that the event occurs. Now, usually that's not a big problem because we're having the event, we're receiving the money very close to the event. If it's in the same year or even the same month, we just record it all at the same time. But if you're receiving funds for this event that's occurring in another fiscal year, this can get a little tricky. So we'll have to look at recording the cash contributions in the current period, and then the other portion, the special event revenue, would actually be deferred revenue until we get to the period where the event occurs. Now, finally, the one thing that we want to do, as you know, with all special events is we want to net our direct expenses for the event against this income. We do that for GAAP purposes and for the 990. It's not reported as gross and then the expenses down with the other expenses. We actually report the revenue net. And I want to share my screen with you and show you a couple of presentations here. So this is a very simple presentation. I have a new example where we have a donor who's paid $100 to attend an event and received food and drinks with a fair market value of $60, and the organization has paid $30 for the food and drinks, an additional $20 for other expenses. We're going to use those parameters for all three presentations I'm going to show you. This is the simplest one, where we do the special event revenue is $100. We net the direct cost benefit to the donor, that's the fair market value, that is our direct cost. The organization paid $30 to the donor, so our net is $70. And then we have our $20 other expenses to come up with our $50 net. In this situation, we are not splitting the $100 between our contribution revenue and our special event revenue. So we would have to have another way to do that. Maybe we've got 2 journal accounts in our chart of accounts and we're just combining those for this presentation, but we do need to have those separated. Now, option 2, basically the same thing. We have our special event revenue here. We have our $30 cost to our organization for the meal. We have our additional $20. Our total expenses are $50. So the net increase to our organization is $50. This is easy to follow, very straightforward. But again, it does not separate out the income into 2 types of revenue. So that's what we're presenting in option 3, where we've got our contribution revenue. Now, this is the difference between the $100 that we received and the $60 fair market value of the dinner. We're showing our special event revenue as the $60. So if you add those 2 together, that's the $100 we received. From the $60, we're subtracting the cost of the direct benefit to the donor, which is our cost of $30 for the meal. So our net revenue, or cost of or gross margin on this, however you want to term that, is $70. And then we have our other expenses of $20 to our net increase of $50. So you can see how the presentation gives you a little different insight into what we're going to be putting on the financial statements for GAAP and for the 990. Now, this is perfectly acceptable for internal financial statements, and it's very easy for people to understand. And if that's what works for you, go for it. All right, so that's a presentation of the contribution and the special event income. Now I want to talk about auction items. Many times we have auctions at our events, and many of those auction items are items that are donated to our organization. Those donated auction items need to be recorded as non-cash contributions. And we've kind of covered that before. I'm not going to go too deep into it. But again, we need to do that acknowledgement letter, and we need to record that non-cash income. With auction items, if people are donating auction items, we may want to either put that as income for the non-cash contribution, and our debit is either going to be like inventory of auction items, which is an asset until we have the event, or if the event's going to occur in the same period, we could probably just go ahead and expense those. Now, let's talk about the winning bidder, because that's the tricky part. The winning bidder receives an item that has a fair market value. So the winning bidder's acknowledgement letter has to have that quid pro quo language in it. I want to give you an example. Say we have an auction item. The winning bid is $750, but the fair market value of the item is $500. Now the winning bidder receives an item that's worth $500, so their tax-deductible contribution is $250. And actually, that's the way we record the revenue as well with the winning bid. So we're going to be only recording revenue of $250. And then, of course, any direct expenses we have for the auction, we want to reflect that against the auction income. That may be the auctioneer or other prizes that we purchased. So when we're doing that presentation, we want those direct expenses netted. And then I want to talk about sponsor income. Now, everybody knows sponsor income is not taxable, but there are rules around sponsorship income so that it's not unrelated business income. There has to be no substantial return of benefit. And the IRS defines that as no advertising and no exclusive provider agreement. Like you promise not to use them exclusively for some other service. You can only provide de minimis facilities and services or other privileges. So you can, provide booth space, provide tables, very de minimis other types of privileges that you can give them. And you cannot grant them the right to use your intangibles, such as your logo, any trademarks or patents that you have. You can't give that to your sponsors as part of that sponsorship agreement. If that happens, all this happens, it's sponsorship income. It is non-taxable income to the organization. It's a contribution if you're a 501c3 to the sponsor. And that revenue is related to the event, so it is recorded at the time of the event. So accounting and reporting for special events can be very confusing. We've got our internal accounting, our GAAP accounting, our 990 presentations, and they aren't always the same. To determine the contributions, you'll take the actual amount of the pledges less the fair market value of whatever is given in exchange. Remember, if the ticket price is over $75, the IRS requires you to have that letter with the quid pro quo language. Now, anything that is the fair market value is an exchange transaction and recorded as special event revenue. So we're going to have contribution revenue and special event revenue. Donated auction items are recorded as non-cash contributions, and auction proceeds must be netted against the fair market value in order to determine the revenue and the tax-deductible gift for the winning bidder. And then finally, sponsorships may be contribution revenue depending upon any goods or services that are provided to the sponsors. If we're providing a significant amount of goods and services, it is not sponsorship revenue and may be unrelated business income. I hope this was helpful for you today, and I want to thank you for joining me. Remember, creating a bigger impact starts with stopping the nonsense. If you are dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise. Have a great day.